Jacob, one of the biggest problems confronting advisors today is diversifying and dealing with concentrated stock positions. How do you help advisors do this over at Neuberger Berman?
It's a great problem to have, obviously, but it's a complex problem to solve. And so when we're working with advisors, it's really trying to help give them a framework of how to approach this. And so you have investors who have these concentrated stock positions that have grown, whether due to employment or savvy investing, but now they represent an outsized amount of risk. And they also have been probably held for a while, so they have a large tax bill associated with just selling them. So we've created a framework with 3 buckets. 1, manage risk, 2, defer tax, and 3, pay tax. In the manage risk bucket, it's how do I, without selling, immediately remove some of the downside risks? That's the biggest potential there. So that might be using single stock call writing or collaring to immediately take that away. On the deferred tax side, it's how do I start to get a diversified equity exposure without just, again, ripping the tax Band-Aid off, using loss harvesting strategies, maybe long only, or wanting to be more aggressive, using long short strategies. In that third bucket, the pay tax, that might be the client who does want to start selling some of the stock, but would like to create some cash flow to help pay the tax. For them, they may use the stock as collateral to start bringing in that cash flow so that when they do sell it, they're keeping more money in their pocket after paying the taxes.
And before we get a little bit deeper into how you do these things, Neuberger's custom direct investing platform really has grown significantly over the past few years. I don't know how many billions of dollars you're up to, but you had tremendous growth in 2024, 2025. What's your outlook for 2026, and what's driving this growth?
Yeah, a large part of it's due to partnership, like what we just talked about, helping advisors solve complex problems with a diverse set of solutions. Because you may have 50 clients and each of them have different needs, different objectives. We want to provide the right tools to accomplish those. Largely that's through customization and tax management. And when we talk about tax management, historically tax management was on passive indexes, think direct indexing. We've extended the scope of that a little bit in a way that's different in looking at active equity portfolios where there are higher levels of turnover. The value of tax management can be even greater. So by delivering that solution, we've now helped advisors expand the asset allocation they could solve for. And all of this is in Neuberger's DNA. We're an employee-owned company. We're hyper-focused on building deep partnerships and delivering better investment outcomes to clients.
And you tax manage long short positions as well, right? Because a lot of people, there's hedge funds out there, a lot of people want to hedge on the other side.
That's right. So we are doing long short portfolios now, which is really just an extension of the long only tax loss harvesting portfolio. So now instead of using $100 to buy $100 of stock, we're incorporating margin shorting. We're now able to buy a client, say, $130 of stock long, $30 of stock short. So you've used your $100 of stock. You've now got $160 of exposure. You're getting some pre-tax alpha, investing more in stocks that you think can outperform, shorting stocks you think might underperform, but you've also got this tax benefit that comes out of it because if markets go up, you can loss harvest the short side and you've got more overall loss harvesting.
So we're at the start of 2026. What should investors, taxpayers be doing now? Because we're not exactly in tax season, but we're getting pretty close to it.
Yeah, the new year and tax season offer similar opportunities for reflection on the year back and looking forward and setting the right goals and objectives looking forward. So it's looking backwards last year and saying, did I pay more tax liabilities than I was looking for? Is there an opportunity to get ahead of that before next year? Maybe this next year I'm going to do some rebalancing. I'm going to sell some company stock, or I'm expecting a private equity distribution. Getting ahead, starting a portfolio that's realizing losses, deferring gains can be incredibly valuable.
And then finally, are your services only for the ultra high net worth, or should everyone be doing these things? And maybe your platform just makes it a little bit easier for folks who are not that wealthy?
Yeah, so it depends on how you're defining that. We have tried to bring minimums lower to help a wider set of clients access it, also to access it across more of their portfolios. So think about satellite active. Really, the clients who this is going to make sense for are in the higher tax brackets. They do have some type of capital gains being generated that can be sheltered by the losses. The other buckets of clients are those that maybe you have an existing portfolio sitting in brokerage or sitting in a portfolio that's misaligned with your target asset allocation. Can be a great way to start diversifying and getting in the right direction, especially us being so early in the year.
All right. Well, thanks for coming on and talking about it.
Thanks for having me.